Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's December 11th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. It's a big day for Curzio Research. Launched Rich Suttmeyer's 2-second newsletter this morning, where investors for the first time going to be able to use a black box trading system, which Rich built using numerous data points that he's learned over his 40-year career. And he's tested his system against 30 years of past data to help find future trading patterns and stocks, sectors that he takes advantage of. And a black box is basically an algo system. And we hear about these, and I talk about them all the time. And I always say, hey, you either have to adapt or die, because you're looking at companies like Two Sigma, never had a losing year. These funds are not focused on what the company does, how many employees they have, what the earnings are. It's just looking at trading patterns and being able to execute these trades in seconds, in less than seconds, millions and millions of trades. And to have access to that is really cool. So if you're looking at the average investor, and my goal at Curzio Research is always to bring my experience and everything I learned and my network and stuff and bring it to average people. That's what my dad did his whole career. That's what I'm doing here. And, it's been very good, and we're growing, and it's a lot of fun. And when it comes to this, it's something that I'm really proud of, because if you're looking at how would you get access to a system like this, you need basically minimum $10 million just to get into a fund that uses this methodology. Some of the biggest funds I mentioned, like Two Sigma, again, never had a losing year. You have Renaissance Technologies, you guys are familiar with, Bridgewater. These funds are even tough to access, where some of them have said, we're not taking on anymore. No matter how much, or a large pension fund comes to them, teachers fund, whatever it is, CalPERS, and says, hey, we want to put in, $3 billion, whatever it is. They're like, no, we're not taking on any new funds. A lot of these things are closed. But when I look at Rich's system, it's pretty amazing. I mean, you saw it firsthand through Chart of the Week. That was a segment where we published for free, so you can basically get an idea of how powerful a system like this is. Because if you look at the track record, Rich was right on almost every one of his trades that he offered in Chart of the Week, and he's been doing it, I think, for about 5-6 months. And now Rich is going to be making these weekly trades only to paid subscribers, which takes him 2 seconds to find these trades through his black box. That's the reason we named it 2-second trader. But I wanted to provide even more value to investors. And because the goal isn't, hey, let me sell you this newsletter, and if you're pissed off a month from now, what are you going to do? You're going to tell everybody, this is terrible, this is horrible, I don't like it. That doesn't do anything for us, right? When we get subscribers, we want to keep you for the next 10, 15, 20 years. That's the goal. So I always ask myself, being in this industry, what would I want? What's the best way that, it's the most useful way you could use this? And of course, following Rich is one way, but I wanted to provide more value, where I struck a deal with Rich, where we now have this system in our Curzio Research arsenal, where we put it on our site for every subscriber that's going to subscribe to Second Trader. They could use it. What does that mean? If you want to check out the buy and sell levels for all of your stocks, not the ones that are recommended in our newsletters, Curzio Research, the ones that are in your portfolio, you could do that. You just got to put in the symbol. It's going to spit out a price where you should buy close to and sell, near, or basically take profits as it approaches that level on just about every single stock you enter into that system. Now, the entire system, right? It's not the entire system Rich should be using, because Rich gets his levels through these systems, but that's a starting point. He puts another layer of analytics on top of it, where he tracks even more technical indicators, where it's, oscillators, moving averages, even looking at time horizons, where it's a weekly, monthly, semi-annual, annual periods, since these companies trade differently depending on the time frames, right? And they might have different levels, because we know after every quarter companies report earnings. That's a big volatile period, right, for almost every company. But some of these companies are presented at conferences, which I'll get to in a little while from now, which is big, and you're going to see volatility then. So he may look at a weekly area, or a monthly or semi-annual level, where that's how he'll recommend his trades. And it's a complicated system. It took me a while to fully understand. I'm explaining it right now, and I'm amazed by it. I really got deep into this system over the past couple months. But now you can have access to it. the Rich's newsletter. And also access to a system, which we're calling that, the black box tool, where you can enter your own symbols and find your own trading levels for stocks in your portfolio. So, look, if you're on a mailing list, you're going to get a special offer from us. If you're going to subscribe, please use the link that we're sending you, because I'm really offering a really, really good deal where it's not just a huge discount on the price, but we decided to give a full year for free away to you guys. So if you subscribe 1 year, you get another year for free, plus a huge discount to the price. So if you do subscribe to this offer, you get Rich's service for a year, you get a discount, you get access to everything. And again, you're going to get another year for free. So it's only good for the first few days. Available to you, which are the people who've been following us for a long time. And then after that period, we're going to be selling it for a much higher price after the offer ends. So if you're not interested, some people not interested in trading and not interested, that's fine. It's my job to tell you, hey, here's a system. We did a lot of work on it. We got Rich. We locked him down. He's really excited. And it's our first product we launched in 18 months. So we're really, really excited about it. But if you're going to take advantage of the offer, make sure that you do so through that link, because that's going to give you the best offer, and you're not really going to see that anyplace outside of Curzio Research. So if you're not on our mailing list, just go to our website, Curzio Research, put your name in the box. That's how you're going to get the best offers for our products. If you're already on a mailing list, you're probably getting information about this, and we've just been talking about a lot over the past 2-3 weeks, exactly how the system works, how Rich came, its history, which is remarkable. He's got so many stories, but I did want to highlight in the opening today, because I'm getting tons of questions. I know I've been talking about launching this newsletter for a while, and we're just really, really, really excited because, again, this is the first newsletter we launched in a while, and it's just really exciting times. And now we're going to be launching more products through 2020. And it's a lot of fun here, and my team's working hard, so I got to give them a lot of credit. If you have any questions, give me a shout, frankcurzioresearch.com. Now, have a great guest for you today, which you always give me positive feedback every time he's on. He was on twice, and that's Daniel Creech. Daniel's a stock analyst I hired close to 2 years ago, around 2 years ago, I believe. And he's done an incredible job. He worked side by side with me in Florida for most of this time. Now he went back to the West Coast. He covers every stock in every one of my portfolios, listens to conference calls, reads those quarterly transcripts. And this process is extremely important because you're forced to cover tons of stocks across multiple industries. So, I threw him into the fire, and, he's responded positively. It's been really great. And listen, the reason why I put him through this process and junior analysts through this process and throw him right into the fire, because that's how I learned from my mentors. Whether it was my dad, they were rough on me. Kramer was rough on me because, at the time I didn't realize it. Now, I definitely realize it, but they saw a lot of potential and said, I'm going to give this guy my time. And when he makes mistakes, I'm going to be all over him. And, and I always thought, that's the way you want to learn, right? You don't want to get pat on the back for not doing a really good job. Or if something doesn't go right or you're wrong, you can be like, it's okay, it'll be fun. No, it's, what'd you get wrong? What do you need to do? How do you get better? And it's just a state of mind. And, Daniel has it, and it's been fantastic, but he's come such a long way. And we'll be launching a newsletter for him in the future, probably, in 2020. But this is going to be a great interview. So we're going to break down a few stocks in our portfolio. And don't worry if you're a paid subscriber. These are names that are well above our buy up to prices. And also, he's going to share a few of his own ideas with you. Stocks that he believes, not me, that he believes. All my analysts have their own opinion. I never tell anyone what to write. That's the policy here. You could, even if it's against me or whatever, or a stock that I like that you think is going to go down, everybody has their own opinion. Every analyst that I hire, this is an independent firm. That's what I want. I want you, the more opinions, the better. This way we make the best investment decisions. So these are Daniel's picks, personal picks that he likes. And I think he's going to share about 1 or 2 of them with you, which is really cool. And he's also going to give you his view on the political landscape, because that's going to influence a lot of portfolios. And, it's a good conversation, and we keep, I want to say politics aside or whatever, but this is about your portfolio. This isn't about if you're Democrat, Republican. We talk about, the candidates that are coming in, but how is it going to impact your portfolio? How is it going to impact sectors? So really, really great interview coming up. Then in my educational segment, I'm going to get tough on you, because I know it's the holidays. The year's winding down. You're about to spend tons of time with your families, which is the most important thing by far. But right now, you have to make a game plan heading into 2020. Find time to do it, because there are tons of conferences, major conferences in early January, mid-January. I'm attending the CES from the 5th to the 10th. speaking at the Vancouver Resource Investor Conference 2 weeks later. There's also numerous healthcare conferences, energy conferences, retail conferences, and a lot of great companies are reporting and going to report their updated numbers and also give you an outlook on what's going to happen through the year, their strategy, their growth initiatives. If you're looking at biotech, a lot of these companies report data at some of these conferences for their signature drugs, but you want to be ahead of that because my biggest gains have come from preparing before going to these conferences. I'm going to give you tons of examples. I'm going to share lots of ideas. This is going to be a great segment. I know how busy you are. You're looking forward to just, hey, let me relax and just, I can't wait till holidays get here. And just do a little bit of homework, just a little bit you can every single day, because there's a lot of conferences coming, a lot of companies presenting, and it's going to give you a chance. I'm going to show you how you can make a ton of money. I've made a ton of money by preparing now to get into some of these names before the conference or right after the conference when they report data. And I'm going to share lots of those names with you in just a few. Now, speaking of conferences, Daniel Creech is in Vegas right now doing a little boot to the ground of his own. Well, let's get to that interview right now. Daniel Creech, thanks so much for joining us on Wall Street Unplugged.
Hey, Frank. Great to be back. Thanks.
So out of everybody that works for me, which includes over 20 employees now when counting consultants, you have an inside view of just about everything I do and working side by side with me. This has helped me manage my portfolios in CRA and CVO. That's Curzio Research Advisory and Curzio Venture Opportunities. Writing alerts, helping writing alerts, knowing every single data point at every stock I recommend, which is really cool. So let's start with CVO. What have you learned following a portfolio like this, which covers small and micro caps, especially since you've been involved in the last 18 months? Because this is a portfolio that could be crazy volatile. You've seen the great times and also the bad times where the first 7-8 months of the year, we've seen, the Russell underperform the overall stock market by a wide margin, the biggest margin in 17 years. And now a lot of these things have bounced back. But go over that, because I know with this portfolio, you've seen so much. And real quick, guys, before we get to the answer, this is a newsletter designed to find stocks before everybody else. So a lot of times we're the ones that are providing the initial research on it, which is cool. But I wanted to get your thoughts as someone behind the scenes of what you saw at CVO.
Yeah, so CVO, the Curzio Ventures, it's an incredible newsletter because it makes you we do great research on all the newsletters, but it makes you really test your thesis because you have to get comfortable with the environment you're in and volatility. And what I mean by that is it's not unusual for these stocks to move 5% or more in a week or sometimes in days. And I would, basically every investor out there is okay with volatility. Everybody says, oh yeah, I'm comfortable with volatility. I can take on risk as long as the stock's moving in your direction. Well, if you say you're comfortable with something dropping 20% and you'd buy more, then when it actually drops 20%, it's going to put you to the test. So knowing your environment, knowing that these are volatile stocks in nature and the risk reward is a great setup, that has been a big learning curve. And, I've had the chance to work with you a little over 2 years now, and it's been great. And time has really helped that. But it definitely just, hey, make sure you know your thesis, do your research, and then you have to kind of learn to block out that noise. But it is difficult. You and I, we have a lot of good, colorful conversation when things are not going our way. And, that's good because we care. And, yeah, it's definitely a learning curve, but it's great to get in that environment and in the zone.
Yeah. You know what I love about this newsletter is it humbles you. So if you ever have a big ego, where you have a lot, now I've learned over, 20 years, over 25 years, when things are good, I start getting a little nervous. And things are really good right now. A lot of these stocks have bounced back. We have good performance in both newsletters. But, you've seen some of those times, and we all go through them, where everything makes sense, but it's just not working from a stock perspective. And why don't you talk a little bit about – I want to give away a couple of names here, and these are names that we're up a lot on, so paid subscribers aren't going to be upset. But a company even like AVAV, which is their environment, which got into early, and even bigger is Invite, because – we've actually watched this stock and I mean, where it is now, but we came close to stopping out. We always want to limit our losses. So we had a pretty big stop on this thing, but just go over that, because I think when people understand that and they get into this newsletter, it's getting better, where I used to get so many questions from subscribers saying, Frank, what do we do? The stock's down 10%. I'm like, big deal. You got to get used to that. Otherwise this newsletter is not right for you. But overall, both of those theses really worked out, but it's over the long term. But in the short term, holy cow. I mean, even for me, I'm like, whoa, these things are all over the place. But talk about, especially Invite, right? This is one that we were early on. I know you've done a lot of research on that stock. stock as well, but just, the volatility in it is pretty crazy, right?
Yeah, absolutely. I mean, that thing moves. I said earlier, you can move 5% or more in a week or a day. That thing can move 20% or more. And it's also crazy because when you're dealing with companies that aren't necessarily profitable yet, so you have to exclude that and focus on the long-term goal, and then see if management can execute, which they have. As you said, Invitae genetic testing. I mean, the number of tests they're doing is going through the roof. It's absolutely incredible, and it's a big picture story. But the other side of that is that it teaches you these companies, you have to expect sell-offs. Even if they don't have a bad quarter, quote unquote, the stock may react like it's a bad quarter, but that's just normal. And again, that gets back to the environment. The other thing that these stocks have taught me, and the volatility, is to learn how to take your winners. So you got to respect the market. When you get a big gain, it's okay to take money off the table. We have a few positions in CVO right now that we sold the first half of the position, Invitae being one of them, for well over 100% gains, and you continue to hold the second half, and that really helps with the volatility as well. So that's been a great learning curve. But Invitae just makes you focus on the catalyst, as you always drive home the point. You got to know your thesis, and you got to have a catalyst for the stock to move higher, and management to execute. But you just have to keep your focus on that. And as long as they're doing the core thesis, as long as they're still going after that main goal, genetic testing in this case, then you have to ignore the volatility and the noise. And yeah, we came pennies from closing out on that one, and now it's I think the second half's over 160% gain. So it's a wild ride.
Yeah, it is a wild run. I guess, from our perspective, if everyone listened to this, when I was talking about ours, Daniel, and my perspective is, our goal is really to buy at the lowest price possible and sell at the highest price possible. But, when I'm getting into these names, I'm thinking that that's the lowest price. And then when you see these things decline 15, 20%, and sometimes it's going to be on no news, or like we saw with the Russell, a lot of our stocks got nailed earlier in the year. But sometimes these things come down for, maybe they'll announce a secondary offering, which Invitae did, where they raised a ton of money, and a lot of times the stock will fall, but they raise money this way. They're fully funded for the next 2 years. It's what they're going to do with this money. But you'll learn going along the way where maybe the stock I could have gotten a little bit cheaper. Well, I didn't see that cut, but it's always learning. And that's one of the things I love, especially about this portfolio. But let's bring up another stock too, because we're getting tons of questions on it now. It's doing very well. It is Wrap Technologies, where this is a company that you saw from scratch, the type of research that we do here, the type of research that you're going to be doing, the boots on the ground and stuff like that. But talk a little about that situation, because that's another name where, for me, recommending it, I thought, hey, this is a perfect price, and the stock did fall, and now everything's really starting to blow up this stock, and this name is doing very well. They're getting a lot of publicity like I expected. But I didn't expect it to really fall 25. I mean, we think we were up 40%, and it was down 25%, and now the thing's really starting to roar higher. But talk about that whole process and give everyone maybe the behind the scenes view, because that's one that we both researched. We did a lot of homework on together.
Yeah, this is an interesting name, and it was. I mean, I'm very fortunate to see from the very beginning on that. I mean, I remember you flying up to New York and meeting with people and doing the tapings and all that. And when we started digging into this, again, the boots on the ground is key, because that just helps you drive home your core thesis. So when you fly up there, when you're meeting with management team, when you can talk to people, you get a sense. Not that we have any inside information, but you get a sense on how it's going behind the scenes, and you understand. It's just, okay, you can read a conference call transcript, but you don't get the tone, you don't get the emotions behind that. So you really get to dig in, and that boots on the ground research just says, hey, this is the thesis, and it helps you reiterate that because you've been there, you've seen that, you're actually talking to them. So just from a macro perspective, that's incredible that, you get to do that. I can't wait to do that myself, and to go around and meet with teams and find ideas like that. So when the stock was, out of the gates, we recommended that. Like you said, we were up pretty close to 40%, if not more. And then all that went away. So while that's terrible, and you never like to see them go down, because that, hey, I've been here, we know the core thesis, from the macro standpoint, it's a genius company, right? The BolaWrap, non-lethal device, basically a Batman device that restrains individuals. It allows police to get more time to, make the arrest or whatever, but it's a non-lethal. it's a non-lethal tool, and that's huge because, as you see with Taser, and there's a lot of lawsuits, and there's problems with that. So this is a great idea from the get-go, and then just the boots on the ground research just reiterates the thesis when the stock's not moving in your favor, and you just wait for execution, and you know what's going on there.
Yeah, it's amazing. I found this name out through a close friend in the hedge fund industry, and then I met the person who's the executive director, who's very, he's a hedge fund manager, very big, had lots of success with other stocks that he's backed, and just meeting him in person, and I wanted to. He had some of the top law officials there, like the police chief of all chiefs, basically, and that's Don DeLuca. And he shot me with this device. I said, I want to get shot with this. I want to see the whole thing in perspective. And it was just unbelievable. And I got really attached to the story because I'm just talking to the cops and interviewing all of these cops up in the field, decorated officers, even famous cops and stuff. Bo Dietl I interviewed before I got shot with this device, but just talking to them and seeing the emotions, saying, man, I wish I had this device that wraps you up and, shoots just as fast as a gun. A lot of it is used for the mental community, which one of every 4 calls are for mentally disturbed calls, which, these people just walk at you, they come at you and you don't know what they're going to do. And, you have to tase them and that could kill them depending on their heart condition, which has happened. And taser is a good option, but it's not a non-lethal device. It's called a less than lethal device, where this is 100% non-lethal. This wraps you up. It puts hooks in you. I couldn't break out of it. Kevlar. And as you try to get out of it, it tightens and those hooks dig into you. But it was amazing just seeing their reaction. Like, man, I wish I had this device because, they were in situations where it didn't go well. And the last thing cops want to do is actually take out their gun. I mean, forget about what you hear in the media and stuff like that. 98% of the cops are good. There's bad apples in every single industry. But seeing this whole entire thing come to fruition and I covered Taser very extensively during the early phases, and the fact they hired the co-founder of Taser as the president, and now the LAPD chief just got shot live on live television, which was really cool. This wasn't like stage and he got shot. This is live, so they could have messed up everything, and it was amazing. And that's you're getting more attention to this. It's starting to get orders, and it's pretty cool just to see this whole thing come to fruition right now. But I was glad that you're involved in that process, and it's a stock that I know it's a fan favorite. It's something that I'm excited about, but it's really cool. I'm glad you saw that whole entire, the whole research behind it, how it's come through, but also how sometimes it doesn't go your way. And, that just happens in this industry, and it didn't go our way at the beginning, and now it is, and it's coming back. And I think everybody's kind of making money on that stock. But I want to get back to some of the things that you talk about. We have conversations. One of the things you're passionate about, Daniel, is politics. And it's an election year. You have strong opinions about this. Talk about the election year coming up. Talk about some of the things that you see happening and what sectors maybe that could get affected, or stocks or individual names or whatever. But you have pretty strong opinions on this, and I have to say that you've been right so far over the past couple of years. And I'm interested to get your thoughts. So.
Yeah, I love talking, arguing, debating about politics, only because it's just a fun kind of lose-lose situation. You can always poke fun at the other side, and it's a good time. But so I don't want to sound like a perma bull, and I'll get to how my thesis could change developing over the next 6 months. But listen, Trump's the president. It's very hard to unseat a sitting president, and he has all the momentum right now. And I think 2 of the most important points to watch out for are consumer sentiment and consumer confidence, which remains to be very strong, and interest rates, which remain and are going to remain very low, as Federal Chair Powell has basically given Wall Street a roadmap saying, hey, we're not going to raise rates anytime soon, and we may even let inflation run over our 2% target. So what does that mean? That means easy money, lower interest rates. People will borrow, people will spend, and that is going to be a huge driver to the economy going forward. And people vote their pocketbooks when it comes down to the end of the day, and that's why Trump is absolutely in the driver's seat. And what I think will happen in the politics in the world here is, I think it's within a few months, Hillary will announce that she's going to run. For the simple fact, I'm a very simple person, and I think that there's an entitlement feeling there, and I feel like she got it. So she feels that this last election was stolen from her. And as human beings, we do not give up power willingly. So I think it's only a matter of time until she throws her name in the hat with everybody else. And I actually think that the markets will react just fine to that. So, like I said, I'm very bullish going into the election year. And I'm a little hesitant, like you said, it's very humbling when things are going well, you need to be cautious. But because the consumer is strong, and I've traveled for the last several months, I've been on the road at different places, and I've been all around the country. I've taken several Uber drivers, and I mean, they are all talking about how, their local economy is doing well. Construction is going up. I drove into Vegas last week on heading south on the 15, and I couldn't believe the outskirts of Vegas and how much they're building out. So I say all that to look at material stocks. And as Trump gears up for his reelection, he's going to have to tout something. And that's going to be the economy and the record stock markets that we're having. But what that's also going to be is an infrastructure bill. And I know that politics love to talk about that all the time. And it's something that both sides have agreed on, quote unquote, in theory for a long time, but yet nothing gets done. That's the nature in Washington. But I think you can look at material stocks. U.S. Concrete has sold off and not really participated along with other material stocks, which kind of shocks me. So I would look to that. There's a company, HD Supply, which has two business segments, one for facility and maintenance and the other one for kind of construction, from everything to commercial to residential. The interesting thing about HD Supply is that they recently announced that they were going to split into two different companies. So they're going to separate those business segments, and they're going to operate as their own individual companies. I know you've covered this a lot in the past, but a lot of times when you get these spinoffs, it creates great synergies and momentum because a division can now, be ran by individual people who are nothing but passionate about that specific segment. They can allocate all the capital to growth markets, and a lot of times you get a boost from spinoffs. The other thing Trump can do is he's basically like a director or something in like a movie, because you can change as you go. Well, if this doesn't make sense, well, we'll change this. And he's already touting like a tax cut, a payroll tax cut of some sort. And who doesn't like to have more of their own money? So as the election nears up, get ready for a full ring circus. You're going to hear all kinds of crazy proposals from both sides. Anything is going to be thrown at everybody. And I know it's serious, so I don't mean to laugh as it's not a big deal, but it will be entertaining as hell. So everybody ought to enjoy as much as they can.
Now, even with the Hillary thing is interesting, right? And I always say try to put politics aside, all right? Because when you do, so many people get along, but as soon as you throw in what side you're on, it's automatic. I have to hate you, right? I mean, that's the way it is now in the world, especially with social media and all that crap. But when I look at Hillary, I mean, one of the things, if she runs, and I'm saying, okay, how could they beat Trump? I don't think any of the candidates have a shot, to be honest with you. Maybe Bloomberg, let's see if he gains traction. I just think the other candidates are way too far to the left, and they're not appealing to the middle, which is what they need to win the election. They're appealing to their base, which they're going to get those votes anyway. So when I look at Hillary, one of the things is America loves comeback stories, but they effing hate sore losers. They hate when you blame everybody. You blame Russia and all this, and the media can't. The truth is, she did not work as hard as Donald Trump. The facts support that. You could see how much he was campaigning. He campaigned 130 spots in the couple of weeks leading up to the election. And he was in areas that people thought he was crazy, that he ended up winning. And she was campaigning in about 50% less of those places. So she really thought that she was going to win, but that's okay. But I think if she ever came out and said, listen, I didn't work hard enough, I need to work harder, and here's how I'm going to beat him, I would think that would be a huge positive for her, instead of coming out with the same nonsense. Oh, if it wasn't for Russia, I would have won. Oh, I get the popular vote. I mean, America loves comeback stories. We love when you get knocked down and you get up and you keep fighting and fighting and fighting. What we hate is sore losers. Oh, you blame everybody. You got to blame yourself. You have to blame yourself in this situation. And I wonder if she would use that strategy, because if she doesn't, I think that it's just going to be another name thrown in the ring. But it is interesting if you think she's going to come in. She is coming in late in this cycle here, but it looks like the Democrats are not really happy with who's running right now. And that's why I think Bloomberg threw his hat in the ring, right?
Yeah, absolutely. And, a Bloomberg or a Hillary, I don't think the market is going to, because like you said, they're not, most of the party is going after their base, and, everybody's trying to outdo the other one, whether it be entitlement programs or spending or any kind of deal there. And I think if and when Hillary does announce, I think it'll be a shorter race between her and Bloomberg. I really don't think Bloomberg has, if Donald Trump has taught us anything, I think, and Bill Clinton was great at this with being a charismatic guy. I mean, I've met I know a few handful of people that have met him or know first persons that have met him, and they just said, who cares about politics? You would like the guy if you met him. And I think Trump has shown that you have to be able to connect. I mean, his rallies are hilarious, even if you don't agree or like the guy. I mean, he draws big crowds. He connects with his audience. Bloomberg is going to definitely have to improve that. He's pretty boring when I've seen some press conferences and stuff he does, but with him and Hillary both, they're not so far to the left that if one of them did win, I don't think, Wall Street would kind of look at that and be like, all right, we know what we're getting here. These are career politicians in a sense. Bloomberg's got a business background. He knows what he's doing. I don't think it would be a drastic change. They would come out and say they're reversing everything Trump has done, but I don't think that in reality that would happen. And so, from a market perspective, I don't think that there would be a big, that's not a reason to be really nervous from a stock market perspective.
Yeah, no, interesting. And guys, look, everybody has opinions on this, and you could send them frankcurzioresearch.com. What Daniel and I talk about is how to play this from a stock perspective. And that's the most important thing, because that's what you should care about the most is your portfolios. And right now they should be doing pretty well, not just on our newsletters, but the overall market is trading near all-time highs. And you're right. It looks like it's going to continue that because we have easy monetary policy. We know we have the current administration, their gauge of Trump's gauge of the economy is the S&P 500, right? That's it. It's if S&P 500 is doing good, everybody's doing good, and so his focus is going to be to drive that as much as he can going into election year, because that's going to be very good for him. But it is going to be interesting to see if Hillary throws her hat in the ring. And you did share some stocks there too, and infrastructure, which I really liked. I guess we'll end with this because you are in Vegas right now. And I want to say how important it is to do boots on the ground research, but the boots on the ground is a little different because you're there for what reason, which I think is really cool and the audience is going to enjoy.
Yeah, it's so cool. So every year the National Final Rodeo are here in Las Vegas, and a good friend of mine from Montana made it. He's a bulldog, and it's steer wrestling and bulldogging, where they dive off the horse and tackle the steer. And he made it here. He's one of the 15 guys. And so they do, I think, 10 nights every night, 10 nights in a row. And yeah, so I drove over from Phoenix, and I watched him last night. He got fourth. And then hopefully he does well and wins it tonight. But yeah, it's exciting. So it's great stuff here.
And the purses are huge, right? I mean, I don't know anything about this. It's just, I see it on TV sometimes, but you were saying like he finished first in one time, but they accumulate all that money over 10 days. But I mean, we talk about like pretty big money here, right?
Oh, hell yeah. It blew me away. So, like I said, it's 10 nights in a row, and you get one shot at it. And I believe they pay the top 6 in his field. And he won 2 or 3 nights ago. He won his round, and first place gets $26,000. That ain't bad for, 3.7 seconds of work.
Yeah, that's true, right? These guys get thrown, but that must be exciting. It reminds me of Daytona 500. I'm not a fan of racing, but and I haven't gone there yet, even though it's close, and I will. But everyone says just go. When you go, it's different. I'm sure if you go to that thing, it's got to be exciting. It's got to be really cool, right?
Yeah, it's fantastic. The energy is amazing. One of the coolest things about rodeo, I've been to a handful of rodeos over the years just to watch my friend Bridger, but the announcers are just awesome. I mean, you talk about engagement and keeping you entertained. The announcers are great. The atmosphere is wonderful. It's nonstop. I mean, rodeos, they do not mess around. There is no intermission or half times or anything like that in other sports. It is, you go from one event to another, and it is just right. It's right at you. It's awesome. It's a great thing. And of course, being in Vegas is great at, whatever you're in town for, they're great at making you feel good. So there's cowboy. I mean, this town is cowboys and cowgirls right now. And I'm the only one with Nike cowboy boots, so I stick out pretty easily.
Yeah, enjoy yourself because Daniel is single. So yeah, behave yourself over there, right, buddy?
Oh yeah.
All right. Well, Dan, thanks for coming on. I always get emails when you come on. People love the backstory. They get to hear about me, and I know that when you're on here, you never tell me what I want to hear, and you know that I've never hired anyone like that. So I always, love hearing your opinion. I love the fact that how far you've come since you started. Where you're probably gonna start your own newsletter pretty soon. And not probably, but you will. And no, I'm just happy to see it. I know they followed you along the journey as well, which is really cool. And you're going to be inspiration for everybody, all the junior analysts we hire going forward. So thanks so much for joining us. And of course, I'll probably touch base with you an hour from now just to go over everything that's going on with the portfolios and stuff like that. So, but thanks so much for coming on, buddy.
Absolutely. Thank you.
Okay, it's great stuff from Daniel. And I tell Daniel this all the time, and I tell everyone who works for me, I could pay anyone to kiss my ass and to, just not offer opinion or agree with me and be a yes man. That's not what this company is about. For me, I always thought it was important for especially the younger generation to share their ideas. Why is that important? Well, maybe most of them might not be that great, but they look at things from a different perspective. And that's how you disrupt markets. You're not going to disrupt them when you're in the same industry for such a long time and you focus on the same things and you see another company doing this and, hey, that looks like a good growth initiative. Yeah, it's something totally – it may be a price point for a newsletter. Because certain price points don't work. If it's $300, $400, if you test it, people might pay more than that, or usually people pay more than that, or they want less than that. So it's not really a good pricing point, which has been tested. But maybe that's a great pricing point. Maybe people want that pricing point. So just that's an example. But just for me, I always want my employees to be outspoken. I want to hear their ideas. I want to encourage that. So, I love having Daniel on. I talk about, hey, talk about this or that. But, he's just come such a long way. He's done a fantastic job. I'm really proud of him. And, he's just dedicated. He loves the markets. He's, all over it, just reading constantly, always reading research reports, asking questions. You could tell he's passionate about it. This isn't just a job. Those are the people I like to hire because they're going to work the hardest. They want to learn the most. And, hopefully that comes out in the interview, and hopefully, we'll check up on those two situations and see how he does with the two stocks that he offered in the infrastructure area. So if you have any questions about that segment, Daniel, anything, give me a shout. FrankCurzioResearch.com. We say it. This podcast is about you, not about me. So be sure. If you have any questions, comments, send an email, FrankCurzioResearch.com. Let's get to my educational segment because it's a good one. Every year around this time, I talk about how important it is to put in the work in finding new ideas. Since there's tons of major conferences in early and mid-January, where it's kind of a period where people just get back to work and they're like, oh, all right, this is cool, whatever, where you're going to see lots of ideas. You're going to see me busting my ass, alerts everywhere, giving you full details of every single trend at the Consumer Electronics Show, what companies are good, what companies are bad, what trends you need to focus on. The CES from the 5th to the 10th. And if you're not familiar with the CES, definitely attend it. It's the biggest conference, I want to say, in the world. 180,000 people are expected to attend, over 4,000 companies presenting. All these technology companies, almost every major one that you could think of, and all small ones, little ones, they're going to present and showcase their ideas and their products that they're going to launch through 2020. So you get a firsthand look at this, and it's an awesome conference, especially for me, because of the podcast, I get a media badge and a research badge, and these people want exposure. So when I see good ideas, I can say, hey, I like to interview you. We're bringing a film crew down now, which is cool. Which is going to be filming a lot of these interviews, and you're going to see lots of stuff on Facebook, lots of stuff on Twitter. But it's really, really cool. I do a lot of work, a lot of preparation to make sure, because there's so many companies and 80% of the conference is BS. It's fun, but I'm talking about from an investment perspective. You have the JP Morgan Healthcare Conference, which is huge. Early January, and this is where some of the biggest names in the industry present their latest data on their signature drugs to the world. That's from the 13th to the 16th. ASCO, American Society of Clinical Oncology, 9th and 10th, they have a conference focused on breast cancer. And then in mid-February, there's another conference, and this is a big one, which is called the 2020 ASCO SITC Clinical Immuno-Oncology Symposium. They should think of a better name. That's the name of it. So basically, it's immunotherapy companies. If you're not familiar with immunotherapy, you should be if you listen to the podcast, if you read my newsletters, the industry I covered. I want to say very, very early stages because the great contacts I have in biotech. This is a new way to treat cancer, one of the first times in like 130 years where, we had the traditional methods of radiation and chemo. This is training your immune system through gene editing or T-cell manipulation to basically keep fighting the cancer where it gives up and, cancer spreads. But there's drugs that go into the system and different, get hundreds of different applications for this where it encourages and tells your immune system to keep fighting. and the results have been unbelievable. And you're seeing, young kids that have had cancer and say that, hey, you probably have 6 months to live, that are alive 5 years later and cancer free. So a lot of important data gets released where you'll see companies in biotech move up or down, not even 50%. Sometimes they go up, they triple in a day, or they could lose 70, 80% in their value. For me, I like to look at a lot of names going into these conferences to see the data. Maybe I'll buy it on if it's negative and I think that, the stock gets nailed and this data is still good and it's going to come back to the market. Or if they report good data, the stock may go up 15, 20%. And that's just a start where I think it could double or triple from there. So I'm very prepared for all these conferences. I have good contacts that go to these conferences that give me the update because I give them updates on, the CES all the time. But you also have the Vancouver Resource Investment Conference. I'm going to be speaking at this event. It's mid-January, where tons of great companies are going to be presenting. And this is a year where this is an important conference. I haven't really been focusing on the mining sector in the past year and a half. I spoke at some of these conferences, but not really. I have a few recommendations in my newsletter, but it's just been such a shitty industry and everything else is working and out of favor. However, resources is the one sector that got smoked in 2019, right? And we just recently saw a lot of tax loss selling in December in these names as investors are using, those losses to offset gains they made in just about every other sector of the market. So it pushed these names down to levels that are ridiculous right now. And now we're seeing high-profile institutions, even including Goldman Sachs, that are optimistic on gold next year. It's going to present a great opportunity because these stocks are dirt cheap, but you have to find the right names. You have to find which ones are fully funded, which has the best projects, the best management teams. These, again, a lot of preparation goes into finding the best ideas for my newsletter. You're looking at the Needham Annual Growth Conference. Some great small mid-cap names presented this conference, and this is on January 15th. So let's bring this all together. Because I just don't want to name conferences and people are like, okay, you can find this on briefing.com. There's different conference sites where you can find a lot of these things. But let's bring it together. I'm going to show you exactly what this means and why I'm spending so much time on it. Let's take a company like iRobot, for example. So iRobot is a stock I told you to avoid last year because when I went to the CES, basically the past 2 years, the robotic vacuums that I've seen, just like when I was talking about the 360 cameras for GoPro, they were much better. They were much cheaper. They did more things. And I knew that they were going to get hit pretty hard because a lot of these companies were coming online and starting to sell these vacuums in America. Now, iRobot was trading at $130 a share in April. Now it's at $45. So I hope you listen to me. Again, I cover my losers. And also cover the winners. That was one of the ones where, hopefully you listened. So iRobot is presenting at the Needham Conference. I think holiday sales were very strong for the company. I mean, you probably saw ads like crazy for the new Roomba. It was everywhere. Every show, if you're watching football, you just see it every place. You spent a lot of money. It's going to result in more sales. So I think the company's going to report decent earnings. Even if it reports in-line earnings, the stock's probably going to get a nice pop, at least a 15% pop higher if I had to guess, since over 60% of the float is still short. After this move higher, again, this is what I'm predicting. Maybe it doesn't move higher. Maybe they had a terrible holiday season. I think they did have a good holiday season. It's probably the one company I've seen market a product more than anybody else, even more than Apple's iPhone, anything. I've just seen Roomba every place I look. After that move higher, it's going to be a good opportunity to short again because I am on the list at CES where companies are emailing me personally to send because, they have a whole platform that you register. They know I've been there for a long time. They know I'm media. And I actually click the box that says, yes, you could have these companies send things to me and they want to set up interviews and explain their products to me, which is really cool. And one company that's very interesting is it's called Trifo. So their new robot vacuum is called Lucy. Lucy's going to debut at the CES. Okay, this is probably like the 6th or 7th in January. It has night vision, which is a first and lets you use the vacuum at night. Its cameras are super advanced where they see down to 1 inch off the floor, where almost every other robot vacuum sees 3 to 4 inches off the floor. And the price point is much, much lower than the Roomba. So especially the new iRobot vacuum. So when I see things like this, I want to see how iRobot is addressing this competitive issue because it's been kicking their ass, and I haven't seen it where they have patents, and I think they're filing, lawsuits against people, whatever. But apparently, they don't have the right patents in place where their technology could easily be duplicated, and that's what's happening. And you're seeing a lot of international companies create the same thing. I told you this, that I saw this robot vacuum thing where it's not the vacuum, but it climbs windows and cleans the windows and washes the windows. So you don't need window washers hanging 30 stories down in New York City anymore. You can just throw a couple of these things up there. It was amazing. It does everything by itself, sticks to, cleans the whole window. It's unbelievable. This is a technology, and iRobot needs to adapt. And I want to see if they're adapting, just like Intel adapted, getting into higher growth industries. IBM adapted. Apple adapted, getting into cloud after seeing the success with Amazon. Companies adapt. I want to see if they're adapting, because if not, this stock is going to fall a lot further. That's an example I'm giving you of things that I'm looking at going in. So I've done the research. I've done the homework. I know what products, I know the competition. I want to see how iRobot is handling this. What are they going to do? What are their margins? Are they discounting this product too much because everyone's selling it for cheaper, which is a better version? These are things that I want to see. And, then I'll determine whether I want to short it or maybe you want to buy it. So if you're looking at the past 8 years, I found some of my best ideas attending the CES. Skyworks in 2014 was under $30 a share. It's over 100 today. Intel 2016. I came back and said, finally, after 3 years of Intel being one of the worst companies at the CES, they're into every new major trend. It's going to take a while, but they're transitioning. Stock was at 29. 3 years later, it's a double, close to 60 now, near a 20-year high, while paying you a nice 3% plus yield on the way. That dividend was as high as 4% because the stock was so cheap. It's like 2.3 or 4% now because it had a nice run up. Amazon 2017. I know everyone's like, oh, Amazon's a great company, but it was the 3 years prior to 2017 when, or the 2 years when I launched Alexa, right, virtual assistant device. You had Google Home and you had the Apple device, and all three of them were displayed at different areas. So they would launch their products, say, hey, it works with all three of these systems. 2017, there was only one system. It was Alexa. That was it. I was like, holy cow, these guys they became the hub for smart homes. That's the hub that's going to control everything you need, compatible with everything, working with all these companies. Amazon's up 100%. So you recommend that stock. Again, it's a large cap stock. You don't need to me tell you about it, but things that I've seen there made me recommend it, saying, wow, this is a game changer that I'm not hearing about because I've been to this conference. You look at AeroVironment, which we talked about a few minutes ago with Daniel. A drone manufacturer in 2017, the stock was up over 200% for us. And, we took some profits. Second half position still up 140%. Again, seeing the drones, the technology up close was amazing. I recommend Cypress Semi in the same issue. It was under $12 a share. Why? Because when I went to all the auto places, Cypress, because Broadcom merged with Avago, in order to get that deal done, they needed to sell some of the components of their business. And one of those was the auto segment, and they sold it to Cypress. So Cypress became like the premier chip company in the auto sector. If you bought a new car over the past 2 years, all that technology, you're looking at Cypress, being all in on this. And that is a major growth trend. That's not something that, you could say it's cyclical because of cars, but all the new cars that are coming out with new technology, you could see, it's amazing how many sensors they have on these things. It's almost like overloaded now. But Cypress, we recommended at 12. And again, I'm not cherry picking stocks. I'm really talking about a lot of these names that I recommended. And Infineon announced that it's going to acquire the company last year, and they closed that at $24 a share. That's they announced. So it was, we took profits, 100% gain. I found Itron pretty much the biggest player in a smart cities revolution. If you're not familiar with smart cities, just look at it. They're all turning to sensors and everything. This way they could water plants during certain times and water the parks, and the lights dim at night, but it's saving millions and millions and millions of dollars every year for these cities. And it makes sense. Why do you have to have your lights, the brightest street lights, the brightest from 2 a.m. to 5 a.m, 6 a.m, right? No one's really walking around. So all these things, and the cameras and parking and traffic and reducing traffic, that's Itron. Itron's up about 50% for us. So last year, to give you another example, if you're a subscriber to CRA, I can give you away another one, but you're up a lot on this, but Omron. So I played ping pong against their robot, which kicked my ass at the beginning, but I did come back. It was a robot pay. It was amazing. It was unbelievable. I filmed it, sent pictures to subscribers. Really cool. But they also make one of the only FDA-approved wearable blood pressure monitors, which is the number one doctor-recommended blood pressure monitor in the world. And I sampled that product. It was amazing. It automatically sends this data to your doctor, tracked everything through their easy-to-use app. Again, it went through all this. And there was like a 6-month wait to get this device. And just seeing the demand, but the stock is up over 40% less than a year for us. Because I went to the conference, I saw this technology, I knew that they were launching this product well ahead of the street when not too many people were talking about it, and now it turns out to be a monster product for them. Lots of names I covered there. So the goal of this is to help you guys out. Pay attention to these conferences. You'll find almost every transcript of their presentation on their website, probably a day later after the conference. And in these reports, which are usually in slides and PowerPoint slides, those are the most updated numbers. This is where the companies, they're going to talk about their growth initiatives for 2020, the strategies that they're going to use, if they're going to be able to buy back stock, what they're doing, are they selling non-core assets? This is where they give you the whole entire, here it is. This is what we're doing, and now you can analyze, and if you really believe they're going to execute on that, chances are that stock's going to go a lot higher. And if they don't, the stock's going to get crushed. But you have access to this information. Everybody does. It's just a matter of going in there and researching it. Because unfortunately, most investors don't look at it. They don't care because these conferences take place right after the holiday season. You know, we start learning about these companies and their new technologies is when they start blowing up and these stocks surge by 30% mid-year. And you know what happens? It's on every media show. The CEO is on. You start learning about it. My job is to get you in these names before that shit takes place. That's how you make the most money. You want to be, when it's mentioned on Fast Money, when it's mentioned at Maria Bartiromo, when it's mentioned on these things, that's when you want to take some off the table. It's usually when these stocks are running tremendously higher, especially smaller names. And it's nice to see them talking about a stock that you know more about that you're actually selling because they're driving the price up, getting more attention in it. But it's a really good feeling getting to these ideas early as possible. This is the best way to do it. Again, it requires some homework. And I know the holiday season here is, believe me, I'm more busy than ever. But please, if you can, start looking at those conferences. There's lists of companies that at every single conference, you'll probably be familiar with some of them, but start doing your research on these names now because you're going to see a lot of these names mentioned in my newsletters in January and February of next year. So, guys, last time here, if you're interested in learning more about Rich Sutmeyer's 2-Second Trading newsletter, which we launched today, you'll find all the information you need in the emails that we're sending to you over the next few days. And if you're not on a mailing list, just go to CurzioResearch.com, put in your name in the subscribe now button. It's for free. And by being on that list, it ensures that you're going to receive the best offers for our newsletters and products at Curzio Research. So, guys, that's it for me. I say thank you for all the support, listening. Really good year for our company and just how we're growing and everybody's coming together. Just really looking forward to 2020. And I also want to thank you guys from the heart. Just the kind words that you've been said to me about my mom. She's still in the hospital, but things are getting slightly better and better and better. It is a long process, but I really appreciate those emails mean the world to me. I try to answer all of them, but so many have come in. I'm really trying to get to them still, but I really appreciate it. And I just wanted to say that. So guys, I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.